Brew Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello TGIF, welcome to the COB. I'm Juliette Sarli. The sort of official end of reporting season, because August has just been such a long month, it seems, this month. We do have one more day on Monday and then a few more results sort of dripping through on Tuesday and Wednesday if those companies have missed the deadline. But you can kind of claim that we're at the end here of reporting season. Let's have a look at where the local market has finished the day's trade. Up 0.7% there on the CBO 200. So a nice end to this week, although it has been pretty flat over the course of the week. It's been one very much of up, down, up, down. The S&P ASX 200 closing higher by around 0.5% to 9,085 heading into match off. And it's actually up by around 1/3% over the last 5 days. Let's get to what the themes of today were though. And reporting raw, because over the month of August, and I'll just have a quick look in terms of what we've seen more broadly in August, we are up by 1.5% over the month. So yeah, we have seen a little bit of green momentum. Don't forget we started August at record highs as well. Certainly there was a tech takeoff today. Nvidia's blockbuster results really boosting its share price up by almost 9%. The chip giant's robust forecast really meeting these lofty expectations. And don't forget you can catch up with Andrew's interview with Daniel Ives as well. He's always sort of the key to watch in terms of what Nvidia's done. And we're watching Warsh as well, Jackson Hole Symposium, of course, and we are keenly waiting to see what the US Fed chair will say there. But let's look at some of the sectors on our market, and led by Nvidia, we did see some very good moves coming through from tech today. WiseTech up about 3%, Xero up by about 4.6%. The gold players as well, mostly higher. Newmont pretty flat there, but Northern Star and Evolution had a good day. Gold futures ticking up ahead of the Federal Reserve Chair's speech later on Friday. Consumer staples as well, let's have a quick look at those. Coles and Metcash giving back a bit, but Woolies did quite well coming back after the earnings that came through yesterday. Endeavour Group as well, and GrainCorp higher as well. So NextDC reported 16% growth in full year 26 net revenue. That was to $405 million. Shares moved higher. Lynas, Virgin Australia, Pexa and Harvey Norman also reported today. Let's kick it off with Lynas. It's closing down about 1.5% despite a significant turnaround due to higher commodity prices. Virgin Australia, well, it's going to pay a dividend for the first time, and it did see profit increase by almost 5% to $501 million. It was almost fully hedged, so that means it largely avoided the fuel cost increases that have hit other airlines. Now Pexa, this is a big drop. So its guidance really reflecting ongoing uncertainty in the housing market, and group revenue forecast was lower compared to full year 26, sending shares on a big downward spiral today. While Harvey Norman was down 2%, it is planning further store openings. Look, underlying pre-tax profit was up almost 11%, but when you look at the net profit after tax reportable, it was only a small gain of around 2%. And we also heard from Gerry Harvey, of course, the founder of Harvey Norman, saying that he still thinks there's going to be a little bit of tough times ahead for retail. That was the stock of the day on the call, and we spoke to our experts, Andrew Coleman from Team Invest and Ben Clark from TMS Capital, for their view.
Harvey Norman is more a property company and an operator of a business model than they are actually a retailer. And that's probably been pretty well understood, I think, by most in the market for at least the last decade and a half, while Gerry and his wife have made that very clear. I think what was interesting, we were talking before about, was this season just business as usual? Well, Harvey Norman's historic 10-year growth rate of earnings has been 4.2% per annum, just faster than inflation, sort of in line with that property retailer model. And what did they report this year? 4.9, so well within business as usual changes.
I would say the stock's really good value at the moment. Andrew's right, it's a pretty consistent, albeit fairly low growth retailer that does what it does very well. I think, like from memory, like nearly half of the share price at the current level would be property backed in terms of its asset backing. You've got to remember those properties are probably worth less in this interest rate environment we find ourselves in now than they were at the start of the year, which might also explain why the share price has come off.
All right, let's get to our Friday guest and welcome to the COB, Shane Oliver from AMP. Shane, I'm so relieved reporting season's almost over. What have you thought of reporting season?
Look, I think it's been okay. I mean, like you, I am always relieved when it's over because there's an avalanche of news as we go through that 4-week period. The good news is that profits are up after 3 consecutive financial years of falls. So that has to be seen as good news. I think something like 69, almost 70% of companies saw their profits up. About 60% of companies raised their dividends. So in that sense, it's good. There was no big downside surprises, no big disasters in here. I think the market has breathed a sigh of relief, though, because we haven't had those big negatives, that profit growth has returned. The qualifiers, of course, that profit growth is very narrowly focused. The rebound occurred because of the big miners going from negative to positive, and that will also continue with the energy companies going forward. Banks still seeing good results, but that is going to slow down. If you look at the rest of the market outside the resources sector, I think profit growth is around 5 or 6%. If you exclude the banks as well, it's around 2 or 3%. So it's not fantastic. And the other problem is that I think any retailer which is close to housing, or any stock which is close to housing or the consumer is facing a tough time at present. And interestingly, that is starting to include the banks, all of which noted that housing loan applications are well down from where they were at the time of the budget. So there's a bunch of drags out there. I think profit growth is probably going to come in around 11.5% once the dust settles, maybe a little bit lower than that. The only problem with that, of course, is that you're seeing profit growth in the US of what's now nearly 35%, once you include that blowout result from Nvidia. And globally, it's sort of averaging around 20%. So we're not keeping up with everybody else because we simply don't have the AI story to keep us going. And of course, in the US, you can just see how strong Nvidia has been relative to the overall market. But if we didn't have what's going on globally, you'd probably look at Australia and say, well, that's okay. 10, 11, 12% profit growth. What's wrong with that? Normal growth in a regular year for profit growth should be around that, or maybe a little bit less. So it's not that bad. It's just compared to everybody else, it's not so good.
That's right. That's where we're sort of lacking, I guess, isn't it, with some of those, big tech names, Shane. What about what the bond market has been telling us and how worried we should be?
Well, I think the bond market is telling us that there's problems out there. The bond market has been seeing a rise in yield. That trend has been going on for some time now. Obviously, the US has been part of that. But not just that, we've seen a back up in Japanese bond yields. So Japanese bond yields, or Japanese money, I guess, or capital, has been a sort of part of that carry trade. You borrow cheaply in Japan and put it somewhere else. But if Japanese yields are on the way up, there's less incentive to do that. At the same time, we're seeing ongoing US budget deficits around 6 to 7% of GDP. In Australia, it's about 1% or less. We're seeing public debt in the US around 120% of GDP. In Australia, it's about 50% at a gross level. So that is a problem in the US. Public debt problems elsewhere. We're seeing massive corporate debt issuance now as a result of the data center build out. So the big tech companies are raising money, so that's competing with the US government. Obviously, the US Treasury is kind of nervous about this, and that's why we've seen that intervention in the last 2 weeks to try and buy back bonds at the long end and issue more debt at the short end. That may turn out for a while, but I don't think that's a lasting solution to the problem. It's just a manipulation, a form of financial repression, and unless you change the underlying fundamentals, stop borrowing less in the US, basically, that upwards pressure in bond yields could well continue.
And what about the upward momentum potentially in Bitcoin? A couple of people saying here that maybe we are back to a boom with the cryptocurrency.
Well, I think we are, and I think it's notable that last week, not the week just past, the week before, Bitcoin broke above its 200-day moving average. Now, if you look at the previous 4 crypto winters, go way back to 2010, there's been 4 crypto winters. The last one was into 2022. All of those saw a fall of roughly 80% in Bitcoin from the high to its low 12, 18 months later, whatever it was. When the Bitcoin price rose above its 200-day moving average, that marked the end of those crypto winters on each occasion. And the market kept going higher after that. Now you've seen the same thing. We've seen Bitcoin break above its 200-day moving average only after a 53% fall in Bitcoin, which could be a good sign that maybe the days of 80% falls every 4 years are behind us, that Bitcoin is becoming more mature, it's becoming less of the Wild West, more institutional to some degree, not totally, but to some degree. And so we are seeing that rebound. Even if you can look at that chart there, you can see a bit of a break of the downtrend that was in place through this year, although you really need to see a longer term chart to see that more clearly. But that in turn suggests that winter is over for Bitcoin. You can never be totally confident here because it is highly speculative. But the background to it, of course, is the same for gold. Both these asset classes got very overbought into late last year in the case of Bitcoin, early this year in the case of gold. We saw people queuing up outside ABC Bullion in Martin Place. That, I guess, was a sign that maybe this has gone a bit too far too fast. Now that excess speculative positioning has been unwound, and those markets, gold and Bitcoin, I think are in a much better position to go higher. And then at the same time, you've got ongoing issues about devaluation or debasement of the US dollar as the US government continues to issue massive amounts of debt to finance its budget deficit, which puts a question mark over the US dollar. So I suspect that the debasement trade, if you want to call it that, could be on the way back again, supporting both gold and Bitcoin.
Shane, what is on the weekend? I'm going to Alex Warren, who I'd not heard of until my niece asked me to take her. I feel like you're cooler than me and probably have heard of him. Anything on your radar, or do you know Alex Warren? Do you like his music?
To be honest with you, I know of him, but I haven't heard enough of him to form a strong view yet. I'm sure if you like him, I probably will like him as well. At the moment, I'm just, look, to be honest with you, I've had 4 days off skiing, so I'm feeling kind of relaxed about things already, and this is 1 day back, so I don't need a full-on weekend of relaxation, but I'm actually reading a book. It's a biography of George Young, and most people may not know who George Young is, but they would know who AC/DC is, and he is the older brother of Angus and Malcolm Young. And of course, he, with a few others, Harry Vander included, were key songwriters in Australia in the 1970s, Love is in the Air, Evie, a whole bunch of songs, Flash in the Pan, if you look back through Australian music history. And it's just a fascinating book because if I think about Australian history, these guys are almost, Vander and Young, Harry Vander and George Young, are almost like the McCartney and Lennon of Australian songwriting. Just think of classic Australian songs by Rose Tattoo, Angels, John Paul Young, AC/DC in their early days. And these guys were invariably involved in that. So it's a fascinating read. If anyone wants to know about Australian music history, do yourself a favour, to borrow from Molly Meldrum, and check out that book on George Young. I think it's called Friday on My Mind.
Oh, I love Molly Meldrum. Shane, thank you, and thank you always for your insights. I'm glad you had some time off as well. You always work very, very hard, you and the team at AMP. Have a good weekend. Shane Oliver there from AMP. All right, let's have a look at some of the leaders and laggards. Liontown Resources was up more than 5%. Vulcan Energy also firmer. Pantura, PLS and Xero moved higher as well. The laggards included Pexa, we talked about that quite a bit, and Electro-Optic Systems, as well as Ingenia, which was down 4.3%. Now, we touched on what's happening tonight. It is the, I forgot the small caps. There we go. Accent Resources up 28%. Bapcor was up 10%. The laggards in the small end of town include Bisalloy Steel, down 10%. Tonight, the Jackson Hole meeting with Kevin Walsh, the Fed chair, speaking, and also the University of Michigan Consumer Sentiment Survey is released. Tomorrow we're all sleeping in. Next week, this is what's happening, including the official end of reporting season, but also European CPI on Tuesday, the ISM manufacturing PMI on Wednesday, and second quarter GDP as well. We've also got the RBNZ coming through with its interest rate decision, and on Thursday we get the goods trade balance. Let's recap where the local market has finished the day's session. Higher by 0.7% there on the CBO 200. The S&P ASX 200 finished the day higher by 54 points or 0.6% to 9,092. Enjoy your weekend, get some rest. We'll see you from 9:45 a.m. Eastern on Monday.